Hey guys, welcome back. I hope you had a really great long weekend. So we are heading into a brand new week and a brand new month. So before we head into September, which historically has more volatility, let's go take a look back at August and everything that happened within last month. So we did in SPY open right here, and this was after July where we did make all-time highs, and then we gapped down, and then we did see lower highs and lower lows. So we were heading into August already with a downward slide, and we did open right here and immediately dropped underneath the 50-day moving average. And that took us right into Amazon earnings. So after Amazon earnings and the lower guidance, we gapped down, dropped a little more, and then we saw that huge drop down to the 1 week 35 EMA, and this is where VIX spiked to 65. And we did pop back up, filled half of that down gap, got pushed back down to the 1 week 35 EMA, and then from there we bounced. You could see that we did have oversold on Stupid Willie, so we did have the green light. We pushed into this gap. We did get one last rejection here before popping back up and securing the 35 EMA. So we did close out that massive down gap within a few trading days. Let me measure that out. So it took us 4 days to close that gap out, and from there we saw a massive squeeze back up to just under all-time highs. So we did start the month off right here, and right away, within the first 5 days, we dropped 7%. And then after bouncing on the 1 week 35 EMA, we brought it all the way back up to just under all-time highs with an almost 10% move. So back to down here, we saw VIX at 65, and within just a matter of days, we saw VIX back down to 14, which caused this massive squeeze. We did have PCI and CPI right here, so right before inflation data, we gapped up, which fueled the squeeze even further. Right here, we saw the consumer spending gap, which gapped us up back above the 50-day moving average, which you can see we did drop underneath right at the very beginning of the month. So we got back above that 50-day moving average, and we took it all the way up to this down gap just under all-time highs. And after getting right back to the bottom of that gap, we basically traded sideways for the last 10 days of the month. So a lot of resistance just underneath all-time highs, and we started last week right here. So this was after getting into that gap a little bit. We closed most of it out here, and we opened the week right here. And we closed the week right here. So you could see from where we opened the week to where we closed the week was completely flat. So we did not make any headway into that gap in the last week of the month. We did stay extremely range bound, so about between 564 down to 555. We stayed between those two levels, and we closed the week and we closed the month just underneath all-time highs with a little bit of that bear gap left open. So then let's take it to SPX, and extremely similar, obviously price action right here. We did also, I'm not going to go over the whole month again here, but we did open right here. This was last Monday, and then last Friday we closed right here. So again, we stayed range bound for the entire week, and ever since we bounced all the way back up from those lows back up to this down gap off of all-time highs, we've been unable to get past that level. SPY did close up on Friday 0.95%. SPX closed up 1.01%. VIX closed up 3.53%, and we did not close within the implied move on Friday. We traded within the implied move for most of the day, and then we had a power move to close the month to try and make a run for all-time highs. So then taking it over to QQQ. QQQ opened the month right here at a very interesting level, 474, and I'm going to zoom out for a second. 474 was a previous support. We saw that support right here and again right here. Then when we gapped down, we gapped underneath that support, and then when we came back up, that actually took us right to August 1st. This is where we started the month. So we saw that level, that 474 level, as a rejection to start the month, and that dropped us all the way down to the 200-day moving average. Huge move. So from where we opened the month at 474 to the bottom there was just a little bit over 10% of a drop. So from there, we did bounce on the 200-day moving average. And let me take it back to the 30-minute time frame here. That was just on the 1-hour time frame. And so this was where we opened. This is where we dropped. 200-day moving average was right here, and we bounced. And we actually bounced up to the 35 EMA right here, saw a rejection, but then we did swing back up with the rest of the market. We filled that gap, and then initially we did see a drop. Right here was the 200-day moving average, which brought us back above the 30-minute 35 EMA. And then VXN didn't quite get to 65. I think we saw 45 here, which is huge. And here it also only took a few days to get back down to much lower levels. I'm going to say around 18, I'm not 100% sure, but volatility got absolutely crushed after this big drop, which caused this huge squeeze. So we got back above the 35 EMA on the 30-minute time frame, and of course the 35 EMA on the 1-week time frame. And then from there we rallied. We gapped up right here. This was going into PPI and CPI. Then we had that consumer spending gap. That just all fueled us up higher. We got back above 474, which is where we started the month. We filled the gap right above that. And ever since that, we have been trading down around the 474 level. The last 10 days of the month, we saw 474 almost every day. And let's just zoom into last week. That was last month that we just looked at. So we opened last week right here. And from where we opened to where we closed, we actually had a down week in QQQ. So Friday, we did see a big up day though. We did have a crazy trading range. If you watched Thursday night's video, I was talking about how crazy this trading range was, and it did turn out to be pretty crazy. We opened with a gap up, and we gapped up above the 50-day moving average, took it all the way to the top of the implied move, and then from there we dropped down. This was the 30-minute 200 moving average is where we bounced, and we did see support there on Wednesday, Thursday, and Friday. So we gapped up, dropped down to the 30-minute 200 moving average, and then took it all the way back up to the top of the implied move. So opened at the top of the implied move, dropped to the 30-minute 200 moving average, closed at the top of the implied move. And of course that 50-day moving average was right there. So maybe take a minute to go to the 1-day time frame, throw the 50-day moving average, and you'll see how we've been chopping around that level for the entire last week of August. So QQQ did close up on Friday, 1.19%, VXN down 6.27%, and we did close outside of the implied move here as well. I had the top of the implied move at 476, and we closed 476 and a quarter. So if you did sell 476, 477 spreads, you still got paid. It was probably about 25 to 35%. Maybe a little bit more depending on how that closed out, but we did close outside of the implied move. And remember, QQQ did show a really wide trading range on Tuesday. I'm still not sure why. I didn't look into it over the weekend, but we did have, from where we closed on Thursday, this really massive trading range, 2.59%. So I guess tomorrow we're going to find out what that was all about. And then IWM. Let's take it back to the beginning of the month. And I did not mark where we started the month here. So where is, okay, this was August 1st. So where did we actually open? Right here. So we opened August 1st right here, which was actually a really, really important level to know. This was that really long gap. It was our only down gap left at the time. And I'm going to zoom it out. This is the 5-year chart right here. That was right here where we got rejected. This is where we started August 1st. And that was a gap that was opened back in November of 2021. So before we saw that big drawdown of 2022, and we opened the month closing out that gap, and to the penny, as soon as we closed out that gap, we got smacked back down. So after we hit that long gap, we dropped almost 14%. That is huge. So that just goes to show you how important it is to know where every gap is on a chart. This gap, it took over 3 years to fill. And I'm making that number up. It might have been 2 years, but it was a long-standing gap. And after we filled it, we got slapped back down. And then what saved us right here, this is the 1-day 200 moving average. I always say 1-day 200 moving average, the 200-day moving average, and the 200-week moving average. Right here, exactly where they crossed, is where we bounced. And we didn't see quite as big of a move up as we did in SPY, but we did move up nonetheless. We did come back up to the 35 EMA on the 30-minute time frame, and for the most part, we did chop around there at first. That did hold as support. The 1 week 35 EMA was right here, so when we got pushed away from the 30-minute 35 EMA, we did bounce there. And from there, we did head into, this was CPI and PPI. That didn't give us as much of a boost as it did in mega caps or tech, but we did see that up gap here with consumer spending. And after that consumer spending gap, we did take a few days to fill this down gap right here. And then after that, we did bounce up. So this was the last week of the month right here. Last week, we opened with a gap up. We took it to 223, and I believe 223 was something, maybe not. So 223 is where we opened. We made a new resistance right there. And then from there, we did trade down into the end of the week. So we did lose strength in the last week of the month here too. And from where we opened the month to where we closed the month, so we opened right here and we closed right here, let's measure that out, we did see a down month in IWM, down almost 4%. So IWM did close up on Friday, 0.58%. VX came down 3.91%. That is the Russell Volatility Index. And we did stay completely within the implied move on Friday. And lastly, let's look at DIA. We did open the month right here, August 1st. And from where we opened the month to where we dropped to the 35 EMA on the weekly time frame, we dropped almost 7%. And then from there, we did bounce back up. So weekly 35 EMA definitely should be on your chart. And if you don't have it on your chart every day, then at least set an alert for when we get to that level. It's a super important level, and you could see that in every index, it did play a part in where we bounced. So we bounced on that weekly 35 EMA, and it took us a few days to get back above the 35 EMA on the 30-minute time frame, but once we did, we were off. We took it all the way back to where we started the month, and we actually started last week where we started the month. So right around 411, we opened last week with a gap up, and you could see we did stay pretty close to the center most of the week. I didn't mention this in any of the other ones, but we did have NVIDIA earnings Wednesday aftermarket, so every indice did drop on that Wednesday, but they did pop back up on Thursday, even though NVIDIA on Thursday was down. So on Thursday, DIA got back above the 35 EMA, took it all the way to the top of the implied move, just underneath it, and we did end up closing the week within the weekly implied move. So I did have 418 as the top of the implied move for the week, and we did close within that at 416.21. So that was a recap of last week. We had a very wild month last month. It was definitely historical. I've never seen anything quite like it. But hopefully if you joined me here every night, you knew exactly how to trade it and exactly what the trading ranges were. Let me know in the comments below how you did last month. Hopefully you closed green, and then let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. If you have any questions at all, please leave me a comment. I actually had a lot of help when I was learning, so there's no such thing as a dumb question. If you don't understand something I'm saying, just ask in the comments. I will get back to you. And if you took a profitable trade based on something I said or something you learned here, and you want to give back, an easy way to show appreciation is to hit that thank you button. It does take a long time for me to put this content together, and I really do appreciate it. So tomorrow's implied move in SPY is between 560 and 568, and that is from options. The 30-day average volatility is still quite a bit wider, 553 to 576, and the implied move on Wednesday's contract is between 559 and 569. And tomorrow's trading range is not necessarily a difficult one. We do have all-time highs directly above us and that little piece of gap left over from when we gapped down just after making those all-time highs. So right here we gapped down, and for the past 10 days we have been chipping into this gap a little bit at a time. We keep getting pushed down. We have just a little bit of that gap left, and it is right at 563.87. Then the top of that gap is 564.43. And then just a little bit above that, 565.16. That is where we have all-time highs. And that is clearly going to be the bull target. And if we do get above that, then the top of the implied move for tomorrow, 568. Top of the implied move on Wednesday's contract, 569. And honestly, if we do get up to the middle of the implied move here, 568, 569 does look like an attractive spread option. And then to the downside, we have the 35 EMA, and the 35 EMA is just outside of the implied move, which usually signals a flat or down day. There's definitely exceptions to that, and being so close to all-time highs, it's possible that we do see a run for that, but the 35 EMA is underneath the implied move, and 90% of the time that's going to signal a down or flat day. So always know where your 35 EMA is, and tomorrow it is underneath the implied move. So if we do drop down, look to that as a possible support. If we break it, 560 is the bottom of the implied move, 559 is the bottom of the implied move on Wednesday's contract, and then we also have right around here, we did see support last week, Thursday and Friday. That was just outside of the implied move for the next 2 days, around 558. And then underneath that, the 30-minute 200 moving average is also underneath the implied move, but within the trading range for tomorrow. And one more level to add, right here we did see support at 553. This was where we dropped right before we saw NVIDIA earnings. So that Wednesday, NVIDIA earnings were after this, and then after that we still gapped up the next day, even though NVIDIA was down. And then we tried again to get into that gap. So that was 550, what did I say that was? That is 555 right here. So not a difficult trading range. Typically after a 3-day weekend, it does take part of the day to find momentum. So just be careful and don't rush into anything too quickly tomorrow. And then taking it over to SPX, the implied move over here for tomorrow is between 56.10 and 56.85, and that is from options. The 30-day average volatility, much wider, 55.40 to 57.55. So the implied move is 0.61%, the 30-day average volatility, 1.89%. And then the implied move on Wednesday's contract is between 5,600 and 56.95. And directly above us, we do have the rest of this down gap. It is a little bit bigger in SPX than in SPY, so keep an eye on SPX's gap tomorrow. It actually goes almost all the way to where all-time highs are, and that is at 56.69.67, and that goes about halfway up the implied move for tomorrow. So even if you're trading SPY, keep an eye on SPX's chart, because with being this close to all-time highs, you really need to know when that gap fills in SPX. And then above that, the top of the implied move, 56.85, and then 56.95 on Wednesday's contract. If we do get near all-time highs, then 56.85, 56.95 looks like a really attractive spread. I will definitely be eyeballing that. And then to the downside, we do have the 35 EMA. It is right here at the very corner, not quite outside the implied move. It's right here on the corner in SPX. So it is to the downside. And then if we break that, 56.10 is the bottom of the implied move for tomorrow. 5600 is the bottom of the implied move for Wednesday. And the 30-minute 200 moving average is down here underneath both of the implied moves for the next couple days. Then we did see support last Thursday and Friday right here at 55.90. And then earlier in the week and the week before that, this is actually right before Jackson Hole, and this is right before NVIDIA earnings. So two big events and a support at 55.60. So I'd say definitely have this level on your chart right here. And then taking it to QQQ, the implied move for tomorrow over here is between 472 to 481, and that is from options. And then the 30-day average volatility is between 463 and 489. And then on Wednesday's contract, the implied move is between 470 to 482. And because we have a lot going on here, I'm going to take these arrows out so we can see a little bit better. And to the upside, the first level to look for is going to be right here. This is where we saw resistance last week on Thursday, and then before that on Tuesday. So that is around 477, a little bit above that, so you may want to round that to 478. And then if we get above that, the top of the implied move is at 481. That also lines up with a previous resistance right here. And then 482 also lines up with a resistance right here. So if we do move up to start the day, 481, 482 spreads does look like an attractive option tomorrow. When it doesn't, I mention it, but this does look like a good plan for tomorrow. I may be looking at it. I'm probably going to be trading SPX, but if I was trading QQQ, 481, 482 bear call spreads, definitely something I would be looking at. Above that, we do have the next resistance level right here. We saw it the previous Thursday, and let me just zoom out to see if that was a resistance somewhere else. It actually was right here, one of our drops down, and then we swung back up. We did see resistance at 484, so that is right here. And then the top of the 30-day average volatility does take us to the bottom of another bear gap. So the bottom of that gap is at 489, and the top of that gap is 496. So if we do get a swing upwards, the next real sell level is going to be this gap right here. So keep an eye on that, make sure it's on your chart. And then to the downside, we do have a mess. We do have the 35 EMA is underneath us right here and pointing up just slightly. And then we also have the 50-day moving average, which we have literally just been chopping around. And do yourself a favor and go on the 1-day time frame, the 1-day candle, and throw the 50-day moving average on there and just see what's been going on there. I should zoom out to that, but I'm not going to. And then we have 474. That was that big level that right here we saw as support, and then we gapped underneath 474, and then we saw it as resistance. This again is where we started the month of August, and it's very close to where we closed the month of August. We closed just $2 above that at 476. So 474, keep an eye on that level. It's been getting a lot of action over the past couple months, and something tells me we're just not done with that level yet. And then just underneath that, we do have the 30-minute 200 moving average. That level did catch us last week, Wednesday, Thursday, and Friday. If we break that, 472 is the bottom of the implied move for tomorrow. 470 is the bottom of the implied move on Wednesday's contract. And then we have the consumer spending gap right here. And it's a pretty good sized gap between 462 and 468. So a $6 wide gap. And then we also have that 1 hour 200 moving average. It is pointing down. It's going to cause a bit of chaos until we straighten it out. Let me take it to that 1 hour time frame, and it's been pointing down and pulling us down for quite a while now. And to change that momentum, we either need to trade sideways for a little bit and turn it, or drop down to it and bounce. And underneath that, we do have the 4 hour momentum pointing up, and it's just that 1 hour 200 moving average. Just watch. If you think it's not going to pull us down, just watch what happens. It's actually really interesting. So that is QQQ, and then we have IWM. The implied move over here is between 217 and 223, and that is from options. The 30-day average volatility is quite a bit wider, a little bit more than twice the width, and that's 213 to 225. So 1.14% is what options are saying, and 2.9% is what the 30-day average volatility is saying. So clearly, this is where we're seeing the biggest moves, the highest volatility. So if you like volatility, IWM is where it's at right now. And then the implied move on Wednesday's contract, 216 to 224. And to the upside, the first level to look for is where we saw resistance on Thursday, and that is at 221. And then above that, the top of the implied move lines up with where we saw resistance last Monday. We opened up last Monday with that gap up, and then immediately we dropped, and that was at 223. Top of the implied move is at 224 on Wednesday's contract. 223, 224 also does look like an attractive spread to me going into tomorrow, as it sits right above that previous resistance level. And then above that, we do have another resistance level, and it's not a very clean resistance level necessarily, but it was a level that I found encompassed a majority of where we got rejected here before filling that gap before dropping. So that is at 225. And then to the downside, we do have the 35 EMA right here. It is going right through the bottom of the implied move, so not too low. It could keep us maybe flat tomorrow, or we could bounce and run for that next resistance level. But if we do lose it, 217 is the bottom of the implied move for tomorrow, 216 on Wednesday's contract, and then we have the 30-minute 200 moving average. And then at the very bottom of the trading range for tomorrow, we do have that Jackson Hole gap, and then also the 1 hour 200 moving average. It is pointing down. So we may stay flat, or we may drop to that level, but somehow we are going to turn that. And it's not likely that we see too many big moves before that happens, at least not to the upside. And then lastly, let's take it over to DIA. The implied move over here is between 410 and 422, and that is for the entire week. And I'm not going to do the 30-day average volatility here because it actually lines up exactly with that, so there's no point putting it in here twice. And then really easy trading range here. We do have 416.55. These are all-time highs right here. So 416.55. If we do get above it, then we'll have to see where we do start seeing resistance. Then the top of the implied move for the week is 422. And then 35 EMA is right down here. And we do have the most bullish setup is in DIA, and that is because the 35 EMA is trading above the 30-minute 200 moving average. The 30-minute is above the 1 hour. The 1 hour is above the 2 hour. We are in a fully bullish setup here. So until we see otherwise, we are bullish here. We're making higher highs, higher lows, and of course we can pull back, but look to this 30-minute 200 moving average for support. We also have the Jackson Hole gap right here, which we did find support on Thursday. This was Wednesday's drop right here, right before Nvidia earnings, and then after we did see a bounce to make new all-time highs. And then when we dropped from that, we found support on the 35 EMA. So fully bullish setup. And even if you have a bearish bias, just know technically we are still bullish, and you may want to look for actual clear signals that that trend has changed. So there you have it, guys. Let's have a really fun week. Let's see how the week starts. Have fun, trade safe, make sure you take profits when you're out,